So then you've got to kind of look at the mortgage realities right now. And those are kind of interesting. We've got on this screen here, just going to pull up indicating the mortgage rates are in 6.5, 6.6 range. I would call that more the median numbers. Again, if you look at our rate grid every day, we're a little bit better than that here at MortgageWorks. And by the way, those rates that we see that we post on our website, those are 0-point rates. There's no points involved with any of the rates that we post on our rate grid. So keep that in mind, because sometimes when you see lower rates out there, whether it's online or on TV or what have you, you read the fine print, then you find out, oh, it's not a 0-point rate. It's got it's a rate that they're going to make you pay a point or 2 points, something like that. And in our case, we always post 0-point rates, and you can see from looking at our rate grid, we are almost consistently always better than what you hear on the news media as to where conforming conventional rates are. So we are one of the lowest originators out there in terms of the kind of rates we can offer. And by the way, we charge no fees. We never have. We don't have underwriting fees, document fees, processing fees, nothing like that. That's not something we've ever done, and we will never do that to our customer. We get paid by the lender, not by the borrower, and we're not going to charge any other miscellaneous so-called junk fees as a lot of lenders do. So again, back to that mortgage reality right now, given the Fed's balancing act of trying to improve the rates, the Fed funds rate specifically, to help support the housing market. Again, it's not being too aggressive about that because they don't want to fuel an ever-increasing explosion in the AI tech industry. That's where they're trying to find some balance. Refis. We are starting to see some more refis in this environment. Now, those refis are typically a couple of situations, I should say. One is we have seen some homeowners who are a little bit extended on other debt, consumer debt in particular, or they have some other pending needs, sometimes critical needs for pulling cash out of their property. So the cash out refinance transaction is somewhat evident these days in terms of refi activity. Again, refi activity is still very, very low historically and most specifically and most recently compared to the pandemic period, but refis are kind of trickling back. But it's a very specific type of refi where we're seeing that activity. So it's mostly cash outs. And again, because of either overextension on other types of consumer debt or a pressing need to do something like we don't want to sell our home and give up our 2.5% or 3% rate, because buying another home we have to take a 6.25%, 6.5% rate. But yet on the other end of that concern, we're seeing some homeowners being willing to give up that lower rate to pull a lot of cash out because they want to remodel their house, whether it's the whole house or the kitchen, or redo their backyard, or build an ADU to generate additional income, or get that child who's been living on the couch until they're 34 years old and at least get them in a separate structure on the property. Those kind of things. We are seeing some of that. And by the way, I got to tell you, when rates doubled from the pandemic to now, in particular, like in 2023 and 2024, people were buying homes, they were financing them, they were taking on those higher rates, and in some cases, in fact, several cases, people were doing that and getting rates in the 7s when they bought their home anytime in the last 12 to 24 months. Current rates right now, given our current environment and that conflict we just described with the Fed being challenged with what to do with the Fed funds rate in terms of trying to support housing, but again, avoid an AI tech boom that could be inflationary, rates have moderated and remain stable in a low to mid 6% range. That is an opportunity for homeowners who bought their home in the last 12 to 24 months and have rates that might be 7+, 7.5. You've got a refinance opportunity. If you think you don't, shoot, give us a call. Let me show you some numbers. And I think you'll be pleasantly surprised to find that you may actually, in fact, be able to get what we call a rate and term refi done, and be able to get that rate you currently have down probably as much as 1% lower, maybe a little bit more, and that can give you some significant payment relief. So in that respect, keep in mind that refis are still an option in some specific cases. Again, even lowering your rate as well as cash out for a multitude of needs. So that is why for some homeowners, refinance activity is a good option to consider. And in fact, refinance applications are up from where they have been over the last period of time. Now, the media will tell you that the application activity for refis is surging. I think that's an exaggerated adjective. They're certainly up a little bit. You always have to consider when you hear about or read about a surge or a big percentage increase in something like a refinance application volume. What's that percentage increase from? What's the baseline? Well, if you look at the MBA, that's the Mortgage Bankers Association application statistics for both purchases and refis, what you'll find is on the refi side in particular, applications have been very, very, very low over the last couple of years. So when you read about applications surging by 25%, you have to ask yourself 25% from what? And then when you look at that baseline, then you realize the overall activity of refinancing is still a very, very small percentage of what they were at the peak in 2020 or 2021, when refinance activity was probably as strong as I've ever seen in all my years of doing that.